Hi, everyone, and welcome to our webinar called Before the Structure, Fix the System. My name is Jeff Mustafa. I am the founder and CEO of Health Vue, and I'm joined today by our healthcare finance expert and founder of Health and Life, David Dahm. David, we're going to have a blast today, aren't we?
Absolutely.
We're thrilled to have you all here with us today because today's session is going to uncover what many practices are overlooking. While many focus on the day-to-day operation and updating policies, the real issue often is the system behind the scenes. It's your billings, your process, your compliance, your structure that may be quietly draining revenue and increasing your risk without you even realizing it.
Okay, let's get into this. So like I said, this presentation is a matter of public interest. I do apologize, we're going to probably run out of time. Hopefully we can get some sort of recording of this, so those people that can stay, they can. And we'll leave enough time. Lucas and the team have all sort of agreed we'll keep going until until you run out of the questions. And so if you have to leave at a certain time, by all means leave at the at the end of this next half an hour if you have to, but we're happy to stay on and take people's questions. Okay, so the work that we've done is over a 33-year period. Myself have been involved in tax litigation, in particular with payroll tax, way before people were talking about it in Victoria, which have, and we've won our cases with our clients. You don't hear that publicly because you don't hear about the cases that win, because I guess it sends a different kind of message, I guess. Where the commissioner has actually said, look, these general practices, and one had actually over 33 doctors, and all 33 were exempt. There was about 6 that weren't, but that's more because guess what? Their tax information the individual practitioners had didn't marry up with the data that was submitted to the payroll tax office, and then together with the data that they shared with the ATO. So what you're going to realize is there's a lot of little details you've got to get right to make it work. And the devil's in the detail. It's not, how famous my accountant or my lawyer is, or what insurance company I use, or which bank, or which service fee calculator I use. It's all about what is the intentions of your structures, what is the purpose, what are the systems, and what evidence can you provide to show that you're compliant. It's really that simple. What we're going to show you is actually information that's come from live audits, where this is the detail they're looking at. And whether you think it's ridiculous or not, that's not for debate today. This is what's expected. We don't really want to go down that rabbit hole. It seems ridiculous, but that's the law, and the law basically transcends all of us if you are interested in following the law. The reason why we're here today is because many people don't, because they thought it was a joke, and unfortunately that's led them to a lot more problems than they can imagine. So we have won awards for what we do. That's Lucas's background. I'm not going to spend my time saying who I am, other than to say I have been an ACPAL surveyor for 10 years, which is slightly different to your average accountant. Most of them might have just done tax returns for a lot of doctors. Yeah, we've done that, but we've also done deep dives and actually worked at a face-to-face operational level. So I know what a BOE-DIC test is and whether you pass or fail. Interesting enough, in order to be compliant, your accountant has to be at least aware of these sorts of issues, not only what your website looks like, but how your business runs. And somebody has to advocate for you to ask you the right questions. So then when you're, like when we're advising lawyers, such as people like Lucas, they know that we're speaking and we've seen and can provide evidence. And we're going to talk about an Uber decision where this is becoming quite critical. Please use this as a discussion point. We're not giving actual legal or accounting advice here, other than for you to take it back to your own advisors. We're happy to work with your advisors. We're happy to work with you. We're just happy to just educate everybody today on things they've got to look at and how to become compliant. So feel free to ask questions in the chat. Lucas is sitting there online and he can probably answer some of those questions, but a lot of them, and I've got my top 10, these are the top 10 things people keep asking, whether it's separate banking or otherwise. These are the things that you really need to be a crossover and ask your suppliers, your advisors, are we really doing this, and actually ask for proof. Okay, it's all about proof. So this is in 5 parts, this presentation, and we called it the make it, keep it, hide it, and action points that you got to take away from today's session. So this is going to be almost like a self-audit for you going live. And then you can look at what next steps and what free resources are already available to you. So you can maybe do a lot of this stuff yourself before you start approaching expensive lawyers and accountants. And at least come in with some more really hot questions that are a lot more targeted than just sort of what is, not saying people saying what is payroll tax, but what is a relevant contract. You're probably after this session going to be more skilled than maybe your average lawyer or accountant. on this subject matter, and that's what I can promise you if you even take away 1 or 2 points from this slide deck. So the main thing about making money, it's got to be ethical and sustainable, okay? And when we say keep it from the tax office, meaning you don't pay any more tax than you have to. Hide it means not being sued by people that may be mean to you. I'm not talking about hiding it because, you know, you're a criminal, but basically, you know, insurance is not going to cover you for everything. So making sure that you do protect your assets correctly, whether you're a practitioner or a practice owner. And then we're going to say, look, these are the things that we believe, what I've seen in the last 33 years where people are getting it wrong. One question people ask me is, David, what makes you such an expert on practice management? You know, stay in your lane. I hear that all the time, and I love that question. Look, I come from a medical family. I've been involved in running practices. Like I said, I've been an AgPal surveyor. But more importantly, I was flown by these two little companies called AstraZeneca and Pfizer's when the GST was introduced. And I flew around the country looking at people's legal and tax structures back in 2000. So I've had the benefit of a longitudinal deep dive analysis of this, way before many of my, you know, recent, I guess, you know, firms and accounting firms who all specialise in this subject matter. I've had over a 33 deep dive view and analysis of these arrangements and structures that I can speak firsthand on it. Now, I'm not saying I'm right about everything. I'm just saying I've just had a bit more of an experience with it that some may or may not have. And that's just a question you need to put back to your advisors. If you want to get a copy of this slide deck, it's here. You can use this particular screenshot here of, and you can get a QR code. I actually think there's more opportunities for general practice. It's a bit hard to see if you're thinking you're going to have to pay payroll tax. You're going to be up for $250,000 for every full-time equivalent GP and back taxes, super, PAYG, GST refunds. If you get it right, which I think most of you actually have but don't realize it, I think there's a huge opportunity. And people say, oh, but the corporates are the ones that have got it right and they've got it. In fact, the last thing you want to do is follow a lot of these corporate models. In fact, they're actually the main reason why we're here today, because you guys had it right, but somebody in the corporate world got it wrong and have replicated it, which has now become precedent, federal law, which has actually led to these payroll tax rulings because they didn't quite get it right. And I'm happy to touch base on that if people want to know why or how and take that back to your lawyers. So don't, because you're bigger and you got billions of dollars doesn't mean you're getting it right. It's just that now the tax department's caught up with everybody and they've got more evidence and seeing where people are getting it wrong. So these are all the mistakes we're going to go through. I'm not going to read them out to you. I'm just going to go line by line. And I guess the first one is there is no point in fixing up your practice and making it a tenant doctor practice unless somebody's going to buy your practice eventually. It's not saying you have to sell it today, but selling your practice is a succession plan. It's a process. It's not an event. You don't sort of ring us up one day and say, I want to sell my practice. People want to see a well set up, run practice, both good business and clinical systems, and that's where the value comes from. So don't throw good money after bad if you think your practice can't be sold, and don't expect that anybody's going to buy a practice where it might be tax toxic, because that's going to basically fail on due diligence, no matter how big your practice is. If it's basically, and Lucas can comment on this later, but if you're going to get hit with a big payroll tax bill once the new owners buy it, I don't think they're going to buy your practice. It's worth very much, no matter how beautiful it looks. So, so that's just something to consider. We have been successful with our clients, as there's one here, the Geraldton Medical Group, where you do have good governance structures and you do actually look at both the clinical governance structures as much as the tax, and make mezzanine equity available, where, you know, there's less downside risk for younger doctors that they want to buy in, and they basically have, instead of renting the room, they basically have some skin in the game and they bring in their friends, and it just basically, it organically grows. Those structures have been around for donkey's years. The biggest problem, I think, in general practice is we all treat it as an overhead, not as an investment. So if you go in with that mindset, you're already on the back foot, right? I mean, you invest in your staff because you see them as an asset. If you see them as a liability, maybe you might want to change your view on that, or maybe you need to maybe move that person into a different role, or maybe outside the organization. Everybody comes to work every day is there for one common purpose, and that's to serve the patient. My reasons for presenting today is I see poor structures, inefficiencies, and Jeff's raised some of those, which are very, very important, that basically, in the end, you're hurting the patient by charging them more, or just not being able to give them timely and high quality services, which are things that are totally avoidable, and that's what we're talking about. The bottom line is there's around about 30,000 GPs that are working in general practice, but there's about 40,000 that are ready to go if you can incentivize them to come back to work. So we already have a shovel-ready workforce. It's just they don't want to come to work, right? There's 25% that just don't want to come to work. We're talking about how do you get them to fill up those empty rooms, because that's a lost opportunity cost. It's not your accountant's bill. It's the fact that you've got an empty room that could be generating you revenue, which is what Jeff has been talking about. So what we're going to be talking about is a bit of governance and financial literacy. Here's some basic numbers, because the numbers don't lie. People do, but numbers don't lie. And I start with this because this is actually a very important story about how you can make a more tax efficient and effective and viable practice moving forward. Okay. First thing you got to understand, they keep talking about this bulk billing and 100% bulk billing on 1st of November. Bottom line is, if you've got private billing, 80% is bulk billing at the moment. You're probably making $1.33 profit per patient. You break even, which means you make bank. You don't make a profit. You need at least 6,357 patients per full-time equivalent GP, which means you need about nearly 1.1 full-time equivalent GPs before you even make a profit in your business. I don't care. We've done a 30-year business benchmarking modeling on this particular issue, and that's what the numbers are telling us quite consistently. I'm not sure how many people have done that, but when we did our research, we looked at it. Here's the problem. If you suddenly move from, private bulk billing 80% and you drop that and go to 100%, you're going to make about a $7 loss per patient. And your break-even point moves to 31,000, which means you're going to need at least 5 doctors, and that's a bit hard if you only got 5 consulting rooms, just to break even. So this is not a really good idea unless you're already a bulk billing practice and you've already got capacity. I apologize for the word, but I'm trying to warn people, right? If you're sitting on the Titanic, this is like financial suicide to be going down and saying 100% bulk billings work. And this is why financial literacy is critical. I've given some more detailed breakdowns, and you can see these benchmarks if you want to screenshot there. And there's a bit more of a detail on what your expenses and your revenues should and shouldn't be. And in this case here, we're talking about, and then I looked at the government database and we looked at our own and others. And look, the bottom line is this is really what the breakdown here is, that, the average gap per patient is $20.76. I don't care what the AMA says and what the gap should be for a 23, whatever. When we look at the average gap, because some items you bulk bill and some you don't, that's pretty much what the gap looks like. So that's a bit of a hit if your average gap suddenly disappears overnight because you're telling all your practitioners to do 100% bulk billing. So you just need to watch these numbers really, really carefully. So if you're making a loss, people say, David, but how do you make money? Well, you know how you make your money. It's these backdoor payments, the PIP, right? It's 30,000 per full-time equivalent GP. It does vary, right? And that's what Jeff was talking about. The service fees, how much do you actually charge your practitioners? 70, 30, 70, 40. Some people are now charging for additional costs, and we're going to talk about our service fee calculator, which there's many of them, but I think we had the first in Australia in 2000, because I was not prepared to sign a tax return because I am a registered tax agent, and we are actually expected to check this detail, that there was too many people using spreadsheets or colourful spreadsheets in the cloud, but really they did not actually reflect, and Lucas can talk to this, what the practitioner's service agreements actually said and whether you're even legally allowed to charge it. There's a legal and proper way to do it that is cost effective, and the reality is that your service fees, and this is going to be the real push moving forward, is that you're going to have to start finely tune how you charge your practitioners for various support services based on like a user pay system like Uber is. And that's what's really going to be driving your revenue in the future. Just in case you've got to take a hit on the PIP, you've got to take a hit on pathology. What you've got to understand is here, your annual service fee income here, it's generating you a substantive amount of money in terms of revenue per month, 20,000 a month in terms of service fee revenue per full-time equivalent GP. These are really big, high-level, simple numbers I'm trying to put into people's minds. Why? Because you can do that in the back of an envelope, and you can actually work out how much money you should be and could be making, and that's how you move forward. Some low-hanging fruit opportunities here are like consumables. A lot of people don't look at the value. Look, let's be honest. People don't like paying for lawyers, and people don't like paying for accountants, because all we do is, he just talked to me, David, and he charged me $1,000. That's ridiculous. But consumers, they seem to be more happier that if you give them something tangible like a bandage, oh, that must be a $20 or a $30 bandage, they're more happy to pay for it. Well, guess what? That's currently an overhead for most practices. Well, in our clients, that's an opportunity, right? Now, so the service entity can charge the doctor. You've got to get the GST and everything right, because a lot of people are getting stung with GST bills because they never get this right, and they get the service entity bill direct. Shouldn't do that. Absolutely wrong. But if the doctor's bills for it, it's GST free. And you can raise an extra 100,000 if you've got 10 FTE GPs in your practice by just doing one simple thing that is less price sensitive because people see value in something that's tangible. Even better, this wound care consumable subsidies come in May. The government's prepared to pay for a lot of wound dressings and all that. So there's a lot of low-hanging fruit opportunities that you could look at that could make your life a little bit better. Pathology rents are under review at the moment. We've got one company that's struggling to barely make a profit. So a lot of people who've been happy getting 30,000 per full-time equivalent GP and their pathology rents are going to be under a lot of pressure now on renewals. A lot of people are saying, oh, hang on, they're only doing temporary sort of leases and they're going to go and set up independent, after they've got all the referrals. We're hearing rumors that, there are labs that are going to set up down the road and they're going to be independent sites. So, traditionally where all this money was coming from, and I was involved in a lot of the pathology wars, I call them, back in 2010 with the changes in the laws, a lot of that money is starting to dry up together with the PIP, particularly if you're starting to move away from bulk billing. Okay, so you've got to know your numbers. You've got to know what parts of your business model you can tweak up or down. It's not the end of the world. There's probably more opportunity and it's more sustainable, particularly if you don't have a ready workforce, GP workforce you can just tap into. And you can do this with, respectfully with people. Okay, now your operating profit margin, to me, this is the only number that matters to me. 25%, that's what our clients are getting. Used to be even 30, even better. Right? And people say, well, that's just ridiculous. I've heard other firms say, oh, we're only doing 7%. We've heard actually for Health actually declare that their profits were, they've been making losses ever since they bought primary healthcare, $20-30 million loss. It's crazy stuff, right? So just because you're big doesn't make you better. I mean, if you go and read their annual reports, which many people don't because they get caught up with the letterheads, the logos, and the glitterati of it all, you've got to look at the numbers. And most of you are probably sitting on businesses that make more money than what these corporates make. I mean, they only make $100,000 profit, per full-time equivalent, per practice center. It's such a low profit. So it is possible. This is live data. This is happening now. But people say to me, general practice is, losing money. It's not. You're probably not financially literate. You're only looking at one or two areas. You need to take a top down, look at all the revenue and all the expenses and look at what the bottom line effect is. And that's where this profit margin, this is your opportunity. This is a target you could get. If you're not getting it, press your accountant for it. And that's the next thing. Most accountants do have a bit of problem even trying to identify what that key number is, which means you need to get somebody who does understand your numbers precisely so you can have a realistic number to achieve. But if your accountant doesn't know, your practice manager doesn't know what we're talking about, maybe that's the first thing you've got to do, because then that gives you a more tangible target that's very easy to scale with that particular number. So yeah, you could be making a $5,000 profit per month per full-time equivalent GP in that room. That's my bottom line to all of you. Okay, so these numbers are very, very useful and practical. And the reason why I say that, there are taxation reasons for doing this. Because if you do know your numbers, you can adjust higher service fees, which incidentally, it's not the primary reason, gets you a bigger tax break and you can save $20,000 a year on your income tax bill. Now, one of the mistakes that we see commonly made is this whole separate banking. I love this, and Lucas, we're going to delve into this later on Q&A. But everybody's rushed out to get out a separate bank account because some judge did a throwaway comment over a case called Dr. Thomas Nas, and he said, oh, listen, if you have a separate bank account, you don't have to worry about payroll tax, right? It wasn't even a proper court decision. Lucas just nodded. Am I right? That wasn't even a judicial decision. It was a throwaway line just because I think he felt a lot of heat. He had to say something because everybody was sweating bullets that they were going to get done for payroll tax. So I think he did a throwaway line. I mean, you got to be really careful. And some people have taken these words as, literal and absolute. It wasn't a court decision. Isn't that right, Lucas? Thank you. So here's the thing. If it wasn't a court decision, you're basically standing on shaky ground if you're saying, well, this is not going to solve my problem, right? What people don't realize, it's actually multifactorial. In fact, what the judge did say, for those of you who did actually read it, and as we read a bit more into the actual decision and thinking, they said, if you had a proper agreement with your practitioners that you're going to have their money set aside, and what we say in a separate entity, we call these a quits closed trust. That's the case law. And this is quite old law. I'm not going to get into the boring details. That's what Lucas does. If you want to take this session on for another 20 minutes, we can go down that rabbit hole. But legally, and this is a barrister in Victoria, who happens to be, ironically, the wife of the lead barrister, who I happen to also know, of the super optical case and also the Thomas Nas case. And what she wrote was that, yeah, you could have a situation where doctors lend their money, put it into this, let's say, a company account, and we'll show that in detail a bit later, and you can still have your centralized banking where there's a pre-agreement in your service agreement. That's what things like people like Lucas do, where you can deduct a service fee, a percentage of that particular money that the doctor has put in there, 70-30 split. That 30 can be split, at the end of each fortnight or each month. And therefore you don't have cash flow problems, you don't have reconciliation problems. But the real problem people have is they hear this advice and they go and run off and do it. They go and set up a company. But these things don't work unless you do it properly. You're supposed to speak to your doctors. You're supposed to show there's intention. There needs to be a vibe where they actually understand what they're doing. And sadly, why people are falling over in these audits, and we've seen it, I don't know, the accountant told me to sign it. Oh, I did it for tax reasons. Okay. And this is why people are failing their audits. They don't understand. Okay. And so it's just not enough to say, oh, I can just set this up. You have to set it up properly, and it has to be done with appropriate consents. Okay. But it can be done. And we've been doing for this our clients. And in fact, that's why they have won their audits in the past, because we've been able to demonstrate that the intention was to always have money kept separately. And people say, yeah, but I'm already doing that. Well, you can't if you're using the same ABN and TX file number that you're paying your staff from, right? Where all your service fees are going in. And these are the mistakes when they go and look at your financial statements, people get busted on. You can't undo that because you're making statutory declarations that you are actually that this is a true statement of fact on how your arrangements work. Now, I'm not going to go into the problems of centralized banking or separate banking, but I have listed it there from the fact that you can't do proper bank reconciliations, which is actually a criminal offence under the tax code, and accounts are now being put under a lot of pressure to start checking service fee calculators and fake journal entries into bank accounts, which I've seen with some very popular brands, sadly. And unfortunately, that does self-incriminate the practice if it comes on audit. It's really, really important that, people do actually understand that the devil is in the detail. This is why a lot of people are saying, but I thought I was doing all the right things. But when you look at it, it's not really doing what they're meant to do. There's no service agreement that's been signed off. There's no permission given for money to go into a bank account, let alone they didn't even sign off on the service fees yet. These service fee calculators are magically coming up with pretty tax invoices and calling themselves tax invoices, but they really don't stand the test from a legal point of view or even a taxation compliance. And this is why a lot of people are getting caught. So there are some practical challenges. I won't go into too much detail, but fraud, error, disputes, and more importantly, tax disputes, because there's data matching between your BAS and their BAS. It should be a mirror image. The government's got better technology now than you can imagine, and that's why they're going on full throttle, because it's easier for them to just do what are called desk audits by sending out emails, and they can already pick whether you've got a problem. So the options for a lot of practitioners is one, do separate banking, which is great, but I just don't think it works. Everybody's having cash flow problems. They can't get money back from their doctors, let alone they can't do the bank reconciliations to work out the service fees are correct. So most practices are generally losing money on that idea. Two, to pay payroll tax. Well, yeah, that's really great. Well, if you're now suddenly paying payroll tax, you're probably going to have to pay 12% super, which is what it's going up to from 1st of July this year. Or the option is to have a tenant doctor arrangement where you don't have to worry about any of those issues. Get a proper quiz close fee collection company set up, and it's business as usual, and you can work with your existing structure so long as it was set up as a proper service entity structure. And my point about that is people don't understand what their structures are. They say, hey, David, I've got contractors and they pay a service fee to us. Well, that's an oxymoron. That's like a trans entity. You're not clear whether you're a medical business. You're not clear if you're an administration business, and you're mixing. That's one statement says you're not clear on what your structure is and what your business model is and what your workloads are, which is why people are tripping up on audit. We're going to clear that air for everyone in a moment, but this is the reasons why people are getting caught. As soon as people say that to me, I straight away know you're going to lose an audit because you don't understand, or your advisors are not. And I've seen advisors, high profile ones, mix their words in the same way. It goes to our practice company or practice trust. Well, automatically you've got a tax problem. And they pick on words, the tax department, and a word can set them off down a certain train that you can't unsay it. When we talk about banking and tax symmetry, our clients get this is from our Doctors Pay Calculator program we've been running since 2001. So we're not newbies at it. And it's very, very clear. It actually works out and tells each practitioner, and this saves them on red tape. In fact, we've got a number of clients that they're actually the practitioners are paying for the doctor's pay calculator. They're not, because this is useful for their tax returns. It actually does summarize all their income tax information at the end of the financial year, their BAS extract summary, so they all reconcile and tie into not only your books but their books, and there's a history of all their tax invoices. So if there are any adjustments, it's all kind of online on their mobile app. They can check that and forward a PDF to whoever wants to look at that information at an instant. The issue that people are getting wrong here is that we are seeing people getting PMS data and saying, well, if it got received in best practice, it must be right. Well, that's not how it works. I used to be a corporate auditor at KPMG, and I can tell you that's not how it works, right? It has to actually hit bank. It has to be reconciled. And yeah, you'll say, oh, but I get all the Medicare ones, right? Yeah, but what about the third party? What about, transport insurance and work cover? You're not reconciling those, are you? What about the indirect payments like SIPs? Well, in order to give people information that's comprehensive, it has to collect all of the data, not some of it, and near enough's not good enough. We've got to reconcile to the cent, not to, well, I did my best. Okay, that's not how it works. And that's what triggers an audit. And people say, oh, but it's not really a big issue now, David. I said, well, 1st November, if they're going to get this PIP payment of 12.5%, now practitioners who bulk bill, and they're going to give you a backdoor PIP, which is not being entered onto your best practice billing system or on your Praxoft, guess what? You're giving them incomplete data, and you're giving them tax returns that will be a data mismatch. And that's how these little Christmas tree lights start to flicker on very, very quickly. So our program basically does get live bank data and puts it in, and also gets the practice management data. So then you can actually do like a traffic light reconciliation. And basically when you hit that button and calculate service fees, because it's actual cash that hit the bank, so it's cash flow friendly and it's tax accurate. If your accountant has not reviewed your software, if your accountant is just signing, and you can see the odd accountant does a tick and flick job because you're trying to keep their fees down, you're probably at risk. It has to be done properly. You can't be half pregnant. And an accountant and a lawyer, and Lucas has looked at our stuff, and I've signed off as a registered tax agent. As soon as you do all this, the tax office says you're immediately deemed a low risk, even from a contractor, a superannuation point of view, if you take these steps. And what this service calculator does, it actually pairs the agreements that Lucas actually prepares, digitally signed electronic service agreements, e-signed, that actually these calculations are all based on those service agreements in real time. Okay, so unless you're actually doing that, it can't be just the calculation, but you've actually got the agreement saying what you're doing is legal. You could have a situation, you could lose an audit because you haven't got that sort of seamless flow through of information, and most importantly, legal information and tax compliant information that your books line up with the practitioner's books. And that's basically what's triggering these audits. Okay, that data mismatch. Service agreements and the opportunities there. One of the things that people say, look, doctors operating as independent tenants will impact team care. You can't. That's another myth that came out from a very prominent practitioner, GP, from what I understand. That's just rubbish. You can have a group of doctors co-located, sharing the back office, the nursing staff, the reception staff, and you can actually have fees that say, well, listen, if you want to do care plans, all right, there could be a higher service fee for care plans, and it might be 90% because you're still going to make more money because care plans attract more value. So, there is a lot of these sorts of rumors saying, oh, you can't do that. That's just rubbish. It's a user-based system. If you're offering a system whereby you're providing practice management support services to practitioners, there is no reason why this model can't work for you. It's just that you might want to more carefully articulate it in your service agreement terms and conditions, and also have an accounting system that can quickly and easily, and this is what the doctor's pay calculator does, to actually calculate those numbers. And you can incentivize them. We've got some practitioners who have bills sent to them for basically not following care plan protocols because it's more administratively intense. So, we're running a situation here. It's a bit like how a barrister's chamber works. And people say, oh, I don't want to be a barrister's chamber. I want to be a medical centre. Well, I'll talk about that emotional decoupling of whether you own a medical centre or do you own a business that sells support services to a medical practice or centre. And that distinction is really important if you want to pay payroll tax and income tax, additional payroll and income tax or not, which I'll explain shortly. But what I want to say is that this model here does not interfere with the doctor-patient relationship, and it does not interfere. And in fact, it probably enhances your ability to have team care arrangements, because one thing I know about doctors is they don't like paying more for something that they don't value. So I guess you can nudge price them into behaviour that is fair and equitable to everybody, because nobody wants to pay for a doctor who's inefficient. You can design your business models to make them a lot more efficient. Now, if you don't have a tenant doctor model, which we'll explain shortly, you're saying, hey, I've applied for a payroll tax exemption because that was the best idea my accountant lawyer told me to do. You've got all this joy ahead of you. You're going to basically dob yourself into these other areas of law that have been in place for the last 2 years, which your lawyers and accountants should have written to you about, which means that you may find out that your practitioners now may not be seen as a genuine business, and that you might have to start employing them on the 1st of July. That's when you sign off those returns. It means you might have to start paying them super. You had to take out 20% PAYG and you forgot to do that. You've misclassified them. You thought they were contractors. Well, actually, they were more employee-like contractors. So this is the real problem that you've got, is that as soon as you basically admit to one thing, you're also admitting to all these other potential rulings and laws that kick in. Superannuation guarantee. Now, I've seen some lawyers be very clever. I love clever lawyers that change a technical word based on a technical case. They do stuff like that only to find out that because they didn't look at the totality of their arrangements, they have found themselves in a situation where then these other laws kick in that they didn't consider, and then all of the advice starts to capitulate. And this is what we're seeing with a lot of people who had service agreements prepared by employment lawyers, which had a more of an employment law mindset, not a tax, commercial, accounting, and medico-legal mindset, which kind of blurred this whole relationship. Are they contractors? Are they employees? Or even are they tenant doctors? Nobody kind of knew, but everybody copied somebody else's template or somebody else's advice. And suddenly we have this big problem called payroll tax that surfaces from nowhere. And Uber's got the same problem right now. There is a court case with Uber. And Uber is basically saying, look, the judge is saying, well, it doesn't matter what you put in your contracts, dear lawyers, even though the High Court ruling said if you've got a contract. Uber's saying, the judges are now saying, and this is an appeal decision in March this year, they're saying you need to be more holistic. Does it look like a duck? Does it sound like a duck? Does it walk like a duck? And if it doesn't, the systems and the operations don't work correctly, guess what? We're going to basically call these people employees and we're going to say you're liable for payroll tax. This is such a big case that it could set a national precedent. Already we can hear that Uber's already lost. This appeal looks like it's going to be upheld. The decision hasn't come out. We're waiting for it, Lucas. I'd sit there and keep checking the mail. But if this actually happens, this is going to set off all these rules here. They're going to be a lot more clearer overnight. I mean, it's pretty clear right now because all the messaging, and this is called serving constructive notice, all these rules have changed in the last 2 years, where a lot of people who are saying they've got practitioners that are contractors are probably going to be employees unless they have a tenant doctor arrangement. I didn't come up with this idea. I'm actually following old case law and being really conservative. And unless you properly identify yourself and be absolutely clear that you either have tenant doctors or contractors, that's the difference between playing this game of snakes and ladders in a world of pain versus, playing chess and absolutely sidestep it and not worrying about any of these laws. And that's the opportunity we're discussing today. Well, really, did you have to worry about this? And my answer to all of you is no, you didn't. In fact, you were probably doing it correctly the first time, but somebody didn't keep track of the detail. How am I so sure? How are we so sure? I've been doing this for years. Hamilton Bailey, Lucas, who's here present, has actually written and seen all the work, contracts, systems that our clients have used, and they actually will provide a sign-off to say you won't be eligible. Lucas will get into a lot of trouble for saying this, for payroll tax, super, or any other employment obligations, including Fair Work, if they have a proper tenant doctor arrangement. And we actually did a product ruling last year that we sent to the tax office, both federally and all state payroll tax officers, including the Prime Minister and the opposition leaders, saying, you know what, we think that clearly there's a lot of confusion amongst the legal and accounting profession. We think there's a legal way out, and we submit all our IP for 33 years to say, guess what, our practices are doing the right thing, but they might have been profoundly misled by their lawyers or their accountants or by whoever, and they are legitimate. And there is a way legally you can ratify if you've been misled to say, yeah, look, we actually did have a tenant doctor arrangement. Now it's been explained to me. It's okay. And Lucas can talk about that a bit later. So, it depends on how far you've gone. But if you're signing off payroll tax exemptions and saying, yeah, we do have contractors, okay, that's a bit tricky. And that's why you need to speak to us or a lawyer that understands what they're talking about. But the reality is, if your intention was always to have that sort of arrangement, then you're fine. And what they're basically looking at here is a good lawyer and a good accountant It's going to be looking at your business model, the purpose of it, then the legal structure. They should have checked your tax returns and financial statements. I see many lawyers not doing it. They're using a template agreement and putting some names and addresses on it. That's not how you do it. They should be checking your BASs and making sure that your accounting systems don't have the word recipient created tax invoices. I've seen some corporates advertise that. Well, that's already a red rag to a bull. Your PROTA and your APRA registration disclosures have to be clear. I mean, APRA, it actually says, if you've got tenant doctors where they're sharing the back office, that's an annual declaration, statute declaration that needs to be made. If it's not, then yes, they can be seen as contractors, and bang, you've created an opening line of evidence to say, well, maybe these could be deemed employees. Central banking and commingling your bank accounts with the same entity. These are the reasons why you're getting caught. This stuff is very easy to prove in your financial statements. So there is a number of things here. So I'm thinking my battery's going. One sec. This is where they get the evidence, fake journal entries and loans and bank statements, right? And this is what we see with a number of service fee calculators, and we do review people's work, that, you know what, they're saying it's got receipted from Praxoff, but no money was actually receipted. This stuff is just, as soon as they see evidence of that, they'll look at everything else and say, well, how much of the rest of these numbers are fake or real? And this is what creates disputes between practitioners, particularly now they're doing their own separate banking. It's becoming quite clear that you're not doing it properly, and that's where you get a lot of disputes starting up. Group SMS and recallings all under the name of a medical centre of a practice instead of from individual practitioners. These how the phones are answered by the receptionists, not in the doctor's name, but in the name of the medical centre. Google Street Maps, where you say only the name of the medical centre, but you're not advertising all the doctors. This is what's getting people into trouble. And most importantly, how do your own staff perceive their role and relationship with your practitioners? Do they refer to them as contractors? Do they refer to them as our doctors? Or do they say, hey, look, these are our tenant doctors and we're here supporting their medical practice for them? Here's an example we use here. This is an email that came to a patient, and it pretty much sit there and said, this is the medical centre. They believe they've got tenant doctors, I guess, but the email came out with one ABN. So it looks like you're dealing with one business. It's like, Westfield sitting saying, hey, buy tomatoes from us. But hang on, Westfield doesn't sell tomatoes. It's actually Woolworths. It's not clear. And this is what the public sees. And this is why they keep saying how you advertise is so critical. That's why doctors need their own independent website, separate from the service entity, which has its own separate website where it says, come to Westfield and locate your business with us. You need to emulate that same type of model. You can do that. I used to audit those sorts of businesses back in the days with KPMG, and the tenants would pay base rent plus a percentage of turnover. It's perfectly legal. There's nothing wrong with it. But if you have a look at this here, if you look at these rulings here, these are all the new taxation rulings. They're saying you better do this properly. In fact, this is not new. And a lot of people say, oh, David, he's a difficult guy. He's big on the detail. I can tell you this much. This has been since 2001. There was a High Court case on how you advertise would deem what your working relationship. And this is all about a contractor. In this case, it was actually a cyclist that a delivery cyclist who basically hit a pedestrian, and the pedestrian sued Varbu, and Varbu said, no, that's a contractor, it's got nothing to do with us. And basically it was found. The court said, nah, Varbu, he was wearing a pink high vest. It says Varbu. And basically what had happened is Varbu, but then it was held liable for the damage that particular pedestrian suffered from the medical injuries being hit by the cyclist on that delivery. There have been subsequent court cases in 2001. And look, when I used to raise it, even my own clients, I probably even lost the odd client over it. Please fix your website. Do not call it Royal Australian College of General Practice accredited practice or AGPAL accredited. We went through an 8-year tax audit in Victoria. We did everything else right underneath. Client wasn't too happy with me giving this advice. When we had this fight with the Victorian Payroll Tax Office, I said, why is pursuing my client? He goes, because it's what their website says. It keeps saying our GPs. It keeps saying accredited practice. They're in the business of selling medical services. This is not Westfield. This is this is not Westfield. Woolworths sells tomatoes, but you guys, it looks like you're selling tomatoes, and therefore you're liable, both medico-legally and from a tax point of view. One business, you're not one business that's co-locating multiple businesses. So advertising is critical, and there's been a lot of tax laws in the last few years, particularly going after contractors and IT consultants, where this is becoming problematic. So now if we move through here, what is basically a tenant doctor a structure, and what is one that is a contractor or an employee-like contractor arrangement? This is the one that's giving you all the income tax and payroll tax problems. This is the one where, it's business as usual after a few tweaks for most of you. Basically, a medical contractor is a medical business where basically the contractor is a bit like it's like a real estate agent. They just get a percentage of the revenue. In this case, if you're paying them 70-30, they're getting a 70% commission for every patient that's seen. The money is all hitting the bank account of in this case, the medical centre, and that's why the courts have been saying, well, look, you're one business. It doesn't look very clear that you've got multiple businesses here. When you have an administrative business, and some of you thought that was a bit of a crazy idea, and I was in the media certainly when the first ruling came out in Queensland a few years ago, and I said, look, I gave them a very poor mark out of 10. I said, all you described was medical businesses where you're a contractor, but they did allude to the fact if you did have a tenant doctor, or what they call an administrative business arrangement, where you're selling, like, dare I say, pots and pans to the miners, and you're not the mining company, you suddenly have quite a different arrangement where it's a cost sharing arrangement, where you're cost sharing the back end or the back office of your medical business, and you can have a separate entity that does that, and that's a cost sharing arrangement, which could ironically be a 70-30 split. And guess what? There is no payroll tax. The Queensland office said it. The others are a bit gun shy. They don't want to talk about it because where there's confusion, there is opportunity, and we respect that. But rulings are not law, and Lucas can add to that point. And the reality is, you've got to follow the law. Rulings are cute. And when you go and have a showdown, for those that are brave enough, which some of our clients have, the dog loses its dog bite in its teeth when you start explaining to them, well, actually, there's been a misunderstanding here. And you can actually prove with your systems, with your accounting, with your tax returns, financial statements on both sides of the ledger, which includes the practitioner's information is correct too, that they are a genuine tenant doctor arrangement. You know what? You can move forward. And the reality is most practices in Australia started off as tenant doctor arrangements. My father was a practitioner and he started with this. I've been doing bookkeeping for a service entity since I was 16 years of age. I'm kind of 57 now, so it's been a long time I've been at the helm on this, that they are perfectly legitimate structures and are the go-to structures in Australia, not this contractor thing, which is what all the corporate models look like. And maybe yours might look like that. And some of you have got a bit characteristics of this and characteristics of this. And what they're really saying is, how do you identify? I guess if you're a male or you're a female, and depending on how you identify, you've got bigger complications or lesser complications, depending on how you identify. And that is a mindset that has to happen from your own mind and mouth, regardless of contracts. You need to say, yeah, well, actually, we are truly a tenant doctor arrangement. We have been poorly advised, and we need to go back and re-identify our characteristics and start acting and behaving like one and not copying what everybody else is doing, because that's not who we are and that's not what we generally represent. And I'll give you the legal reason for that in a moment. But the reality is, I just was at a payroll tax webinar yesterday, South Australian GP payroll tax webinar on getting this beautiful payroll tax rebate. You're going to have to be, I don't know, you're going to have to go through all your particular bulk billing incentivized item numbers to get the rebate, because guess what? They're not counted in your rebate. It's quite a complicated calculation process. So even though people have been offering you what I called, register and you'll be payroll tax free, it's not. You actually are still liable for payroll tax. You will only get a rebate if you can jump all their hurdles. This thing is so complicated, and I was actually asked by CPA Australia to actually be their national liaison, to the revenue officers around Australia, particularly this particular South Australian one. And look, sadly, it's really complicated. And I'll tell you what, you've got to get all your paperwork right by 28th of July next month. So this is a bit of an issue, and it's even worse when you were never liable for payroll tax because you didn't understand your structure. And this is, and these are the fears that are playing on. And instead of panicking, people need to just take a deep look and get some clear answers. Am I really a tenant doctor arrangement that's being misclassified, or am I genuinely a business? And a business here is, there's the patient, that's the medical center and practice. And this is, when you look at people's websites, this is what's getting them into trouble. And they're saying, hey, we're bundling up all the plant, equipment and premises, nursing staff, and also patients perceive that these doctors are either your employees or they are contractors and they're being subcontracted in, and that's all been bundled up. And that bill that they're getting, they think they're actually getting it from the medical centre, which is one business, and not from these individual practitioners. And this is where the confusion is beginning. And this confusion, they call themselves a medical practice or a medical company. And I've even seen some big accounting and law firms keep referring to this. This is what's getting you into trouble, because if that's how you see your relationship, then, and you've got this medical business interfering in the doctor-patient relationship, there's your doctor and there's your patient, I think that's where you've got your first problem. This is why they need their own independent website. So we want to flip this thing around a bit. I'll show you what that looks like. But that's got a revenue sharing arrangement. Now, if you get it wrong, and I'll show you the answer and how to fix it, and this is the real problem we're seeing now, is there's these new laws, 1st of July. Every accountant now has to start dobbing in a practitioner if they see their clients getting it wrong and they don't fix it, or the practice. So it's almost like a Hunger Games here amongst accountants, because if we don't dob it in, we've got this mandatory reporting thing, we basically end up losing our tax agent's license. You've got the tax office who's really, really gone hard on this issue earlier this year, said don't trust your lawyers and don't trust your accountants. So who can you trust? So this is a bit of a problem, particularly if your lawyers and accountants don't understand the rules and haven't been able to explain them clearly to you, which is why you're still confused. And you're here today saying, can somebody give me a straight answer? We will and we shall. That's legally compliant. The reality is that on the 1st of July, these tax agent dob-in rules, as I said, are kicking in. You've got the data matching problem, but there's also now $1 billion the ATO have been given to fund tax audits. And this is obviously a key focus here in the small enterprise area. And also 50 million to go after accountants who get it systemically wrong. So if your accountant specializes in doctors and they're getting it wrong for that particular client, they're probably going to look at all of their clients. So there are basically threats coming from everywhere. If you do not understand and you cannot explain your own arrangements, after today, I would say, hopefully you can, you've got a problem, because this is why you get into trouble. And your accountant will first get is the key witness. And if you're sitting there fumbling your words, and certainly in front of practitioners who are now starting to dispute their own arrangements, the next minute they're asking for super, and I've been taking those inquiries now. There are some practices that are now concerned that their doctors are asking for super. This is the world of pain for everyone, which was totally avoidable had they understood their business model structures from the outset. Let's get to the point here. Service entities, these practice management support entities, were set up for one reason and one reason alone. And your accountant, when you set up your structures, the day you arrived and said, hey, I want to own my own medical practice, they would have said to you, look, why don't you set up a service entity? And most people say, yeah, they did tell me to do that. And I just signed it off because you said it was for tax reasons. Well, as soon as you say that, you've already lost your audit, because that will just be considered a sham. The main reason why people have set up service entities is no doctor wanted to be liable for another doctor's mistake. They had their own website and they fell on their own sword if they got it wrong. This point is being missed over and over again by high-profile lawyers and accountants as being the main reason. What they say is, oh, just change the bank account, you avoid payroll tax. Well, tell you what, changing your bank account for that reason alone will probably get you into trouble. Lucas can back me up on that, because then the main reason why you did it was to avoid payroll tax. The first point you need to understand, and particularly lawyers and accountants need to understand, the main reason why you set up this structure is so you didn't want to get sued if somebody else made a mistake, and they can sue up to 25 years if a practitioner makes a mistake. And that's why you set up this service entity. Okay, and that's what a real horse looks like. When the corporates came in and painted stripes on it, and next minute that became a tax target, where they turned those tenant doctor arrangements into what are called subcontractor arrangements, with this single branding and the way the centralized banking had operated. And that's where the thing started to unravel, particularly, in closer to the 2000, when we saw the buying up of medical centres. And there's been some big federal court cases, which I have been involved with, particularly with primary healthcare, where I was asked that question by the Crown Solicitor of the day in Melbourne, when I made a bit of a joke that, corporates can't get a tax deduction on their lump sum payments. And they said, David, how do you value a practice? Which stunned me at the time. This is back in 2016, 17. And I said, you either are a medical business, where you're in the business of selling medical services to the public, or you are in the business of owning a service entity that happens to sell, as I say, pots and pans to the miners, but they're not the miners selling the gold. And that's a clear distinction of structure that you need to stick to, and you never cross that line. So our practice managers are called managers. They're not called practice managers. Receptionists are called receptionists, not medical receptionists. Their employment contracts say it, because the auditors ask for it. And Lucas has those sorts of templates that kind of can make that job a bit easier. By being a tenant doctor arrangement, you basically don't have to increase your patient fees, which is kind of illegal. I've been seeing practices charging a double tap and all these other funny things. That's one way of getting yourself a good audit. You can't sort of pass on a tax to your patients, but you don't need to if you do it with a tenant doctor arrangement. You can improve your efficiency and your cash flow. You can secure more tax benefits, because this actually helps your own doctors, because doctors at the moment, the tax department's looking at all these contracted doctors and saying, are you a genuine business? You don't seem to regularly advertise. You don't look like you're really looking for work. You get all your work from one particular source, and that's being scrutinized right now. But by being a tenant doctor and they're advertising, it's as simple as advertising with your own website with regular Google marketing. Can only be about $20 a quarter. It doesn't really matter. That at least gives some sort of idea that they are running a separate and independent business, and that's what they really mean. Are you running a genuinely an independent business? And these things are very easy to fix with computer software and programs, where those things can be backlinked, the phone calls, the email inquiries, back into your service entity to help them. But the most important thing is, you're taking all your instructions from your practitioners. You're not telling your practitioners how many care plans they've got to do or whether they bulk bill or not. If you're doing all that kind of stuff, none of this is going to work. You can give them a discount on a service fee if they bulk bill, if you wish, if you think that's a really good idea. But if it's not a good idea, then maybe don't do it, because you're going to have all these other unintended consequences from a tax point of view. So then what you do by setting this up properly and having the right business model, having the right legal structure, then having the right contracts, and then having the right accounting systems and then workflow systems, you basically find yourself that you've got a good tax audit defense. Your billings of the doctors is protected, so just in case the service entity does go bust, and I think that's going to be the next big thing. We've heard about practical businesses like TriStar have gone broke and doctors that have been left unpaid. Having a quiz close structure protects that problem from happening. So if something does happen to the service entity, those doctors are protected, and that will give them more confidence, and that means it's better for recruitment retention, and it's better for continuity of care. Your practitioners don't have to work 90 days in another location. They can work at the same location because they have their own business, because you're providing them support tools. So all of these things that people are doing, which is just creating more work, if you just go back to basic principles, having a tenant doctor arrangement that does get signed off by a lawyer and accountant, that is an annual thing, because that's what basically will reduce your risk according to the new taxation rules that your accountant should have told you and put that in writing. And I've shown you some of those laws there. If you look at that snakes and ladder one pager there, just send that to your accountant and get them to write back to it. You can lower your risk immediately by just getting that signature. Okay, because paying $250,000 in back taxes is not a lot of fun per full-time equivalent GP if you've got that wrong. What does a cost-sharing arrangement look like? This is what it is. You have a service entity, which most of you would recognize. The practitioner now picks front of house, not back of house. And basically, the service entity is bundling up the premises, the plant and equipment, intellectual property, software, support staff, and then selling practice management support services, to these tenant doctors, who basically have their own website and charge the patient directly. And I'll talk about, the centralized bank account called the quiz close fee collection account in a second. And your pathology labs are paying rent, just like your practitioners are paying rent. It's just they might have a fixed fee and yours is on a percentage of gross fees. And that's actually the right way to do it. And this has been the right way since 1978. There was a federal court case called the Phillips case, which says that's the way to do it. You've got to follow these 5 principles, we call it. Firstly, be clear about the purpose of your business. Are you an administrative entity that provides practice management support services to practitioners who have their own medical business? If not, then you've got all these payroll tax issue problems that you've got to deal with. And the perception is, how's it marketed? The processes, how do you deliver the services? Like, you shouldn't, if you've got a tenant doctor arrangement, use the email address of the service entity to actually answer a complaint that's been made against the doctor. The doctor should make and answer that complaint under their own email address, not yours. And we have seen disputes, particularly on the East Coast, particularly with doctors who don't kind of identify correctly the correct sex of a transgender person, make complaints to Human Complaints Commission. And the things that we have seen where there are complaints saying, well, you answered this on behalf of the doctor, so we can join you in a claim, is exactly how you get nicked. And that can drag out and protract out, your and expose you to a legal problem that you never needed, because how it was answered should have been answered on their letterhead, not yours. And your people didn't understand it. Getting a lawyer, they're great, but a lawyer is supposed to be documenting what's actually happening, not writing a template saying, "Oh, we'll do this and this, you'll get away with it," because the legal agreement is supposed to just be an evidence-based contract that says this is what we're doing, this is how we do it, and it's just putting it in writing so everybody's got a document that they can pull out tax audit time, and it should just prove everything. All these systems and processes just proving what's in that document, and many don't do that, and I can show examples of what I mean. The main reason and purpose for your business is to provide practice infrastructure support to practitioners. That's why you get a PIP. I call it a practice infrastructure payment. Now, there is a federal tax ruling on this, because I was involved in it in 2008 with the AMA asking me federally to talk to the ATO about it. And they do recognise general practitioners, service entities, and practice payments can 100% go into your service entity, together with the pathology rent and together with your tenant doctor service fees. These are your primary sources of income. You might have other sources, but these are the primary sources which justify why you have a separate service entity. And this is where it gets a bit tough, because people go, I want to own a medical practice, not a service entity. It doesn't sound sexy. Well, this is where the emotional decoupling starts. Well, do you want to pay the extra tax? No? Well, then just accept the fact that you do own a service entity business, which is an infrastructure business that supports tenant doctors, which could be allied health specialists and GPs, and you provide the support mechanisms for it. And that's what people have to now revert back to. Everybody likes the idea of owning a medical centre. It sounds great, but that's what gets you into trouble. And this is an example of just, you say, when you say about us, you're saying, well, these are the doctors co-located in this case at this particular location. And what you're saying to them, why don't you, tenant doctor, establish your practice here, not get a job or I'll pay you a percentage of gross fees and I'll give you a guaranteed minimum. You shouldn't write that. You should say, look, why don't you establish your practice here, and we maybe can give you a discount on your service fees of $1,000 or $100, whatever it is, and that's a leasing incentive, and that's perfectly fine, because you get that anyway when you're locating your practice to a new location, and the landlord might give you a cash incentive or say, look, listen, I'll pay for your fit out. You can do exactly the same thing, and that's not crossing that line, and that's what's really important. Okay, and your whole website, and where people are going to get caught are their websites, where it says our doctors, our general practice accredited. This is what is wrong. And by the way, I want to qualify, I'm not endorsing that this website is perfectly correct. I'll just give you an example. You need to look at this very carefully. But language, this is why my client got an 8-year audit. And in fact, they only got an audit because an accountant wanted to dob that practice in, okay? Not because they were doing anything wrong. And the primary focus of the Victorian Revenue Office was actually the website and nothing else. And we asked them, and that's what it boiled down to. Lucas saw that, and he signed off on it, and he knows what I mean. So all of these are the contact points: how the phones are answered, how they're advertised on the website, how the fees are collected, on whose name, what does it say on the tax invoice, what does it say on the letterhead, what does it say on the emails, how are the fees bank reconciled. All of these touch points need to be just looked at carefully. And what you'll find is there is a way to do it properly and even more efficiently and more effectively than before, and technology has been great for doing that. And then you don't have to worry about this Uber decision that's coming. You don't have to worry about these new employment tests that basically are going to be used over and over again in the next 12 to 18 months. I mean, 5 years program is what the ATO and the budget says. They're going to be looking at all these sorts of business arrangements, and doctors are a good target, simply, particularly general practice, because when you go out and you say we need a tax break and you do that on 6 o'clock news and you embarrass your local politician, federal or state, they don't like it, right? Let's be simple. And now in South Australia alone, 60% of practices have said they're non-compliant. They already know in other states that number's, if not bigger, but even greater, that there is low-hanging fruit opportunities to raise a lot of revenue. One thing I've always learned when I've been involved in tax litigation law issues is that you don't go around telling everybody you got a problem, right? Once the tax office starts reading about the paper, you're forcing them to do something, and that's act on it. So I thought to myself, and I've said it in the past controversially, that was a bit of a home goal to go out there and ask for exemptions. The government gave you an exemption but I called it Clayton's exemption. It was an exemption. We didn't get an exemption. They've actually now created a situation for yourselves that if you are doing something wrong, now they do know, and they're now, you're on their hit list or watch list. Okay. And the past audits are evidence of that. That's not me. That's them knowing now. What they now know is a bigger problem. And legally, they have to go and prosecute. They don't have a choice. That's their job. We shouldn't get too upset with them about it. And having a group of doctors say, oh, well, I think that's wrong. It's a dumb tax. Well, that might work. I don't know. I call that peer review in medicine. That just doesn't work with lawyers and accountants. We have a judge. We have a rule of law. We've got statutory rules, and there's evidence. And it's not based on what a group of us think on a social media Facebook page. David's a great guy, or it's a terrible guy. It's no, this is the rules, and shut up, let's move on. This person's guilty because their intentions always was to avoid tax because they moved their bank account, or they're running as a medical center because look at their website. It's really that simple. So what we did is, when we put a submission in last year to protect everyone and taking an offensive position, so you might have an arguable position. We thought, look, we're going to tell the tax department what we're doing, open book. And I don't think any law and accounting firm has done this, but I'm happy to stand corrected. And you probably should encourage them to do it if you're relying on their advice. We did that pro bono and submitted doctor's pay calculator, all our accounting systems that our clients use, all the agreements that Lucas uses to the Federal Tax Office. And we said, we're doing all these arrangements under the service entity arrangement, which is actually produced and endorsed by the tax office, which pretty much is a tenant doctor arrangement described in here. And that was in 2008. They'd actually published this document, and specifically they refer to general practice. And we're basically saying, this is what we're doing and how we do it. And therefore, all these tax liabilities, and this is what you need to send to your lawyers and accountants. Have you read all these rulings? All right. And are we in breach? And what you'll note is that this sort of stuff here is really, you have to read this and then understand what the implications are to really work out whether you're compliant or not. Now, if you're doing this properly, you don't really have to worry about a lot of this. But if you're not doing this properly, all these problems will come to haunt you a bit. So there is a way forward. It's absolutely clear. There's never been any misunderstanding, other than people don't probably read 15,000 pages of tax rulings and spend time with lawyers that I've spent maybe too much time with people like Lucas and invest millions of dollars doing it, which is because it doesn't make bank, I guess. But we're really interested in the truth and getting it right, because we know that, you can't flip-flop with the tax department. It's either right or wrong, and they'll absolutely butcher you if you get it wrong. And all these court cases here, even when we talk about quiz close accounts, these are legitimate structures you can use. And even the tax office uses quiz close accounts when it comes to prosecutions, that these aren't sort of things that we made up. These are things that have existed for many decades. It's good law, good federal law that's been fought in lower and high court everywhere. And it's just good law. And what we're doing is, if you follow the law properly, you should have nothing to worry about. And typically, what are we talking about? This is more Lucas's area. You have things called service agreements. And I haven't seen a right service agreement, unless it's come from us or from Lucas's office, where they have actually clearly spelled out, well, what are your direct banking arrangements? What are your quiz close arrangements? If you haven't got that in your agreements, it doesn't matter by setting up a separate company. It won't work. I can promise you that. If you don't have, a tenancy floor plan in your service agreements, it won't work. Potentially, it could be argued, right? So if you spell it all out, they're less likely to go after you. And the key is to have it all spelled out, so then they don't, have a sniff at you and go, oh, I think we'll have a crack at you now, because guess what? These areas are grey. There is no shades of grey. You tell them exactly how you do and what you do, and your contract should actually spell it out line for line. So there is no area where they can argue some grey points. And this is a message to the banks, we say, is if you're a bank, watch out, because banks are sitting there, and we're seeing some really clever ideas. You get direct debit authorities, and people have got these service calculators that do that. If you haven't got valid and legally valid service agreements in place, people can go after the bank and say, well, listen, there hasn't been absolutely clear instructions given on our structure and on debiting that money. So the bank gets into trouble, as well as obviously the practitioner and the practice, if they haven't got their paperwork right. So look, we're seeing too many what called simple and easy, solutions, because it looks like a cool idea. The reality, it can get a lot more complicated, and either do it properly or maybe exit and work for a clinic that is prepared to do that. You can still do and run very successfully your service trust. You can still do legitimately income splitting. In fact, you can probably save an extra $20,000 a year, each of your doctors who may want to consider ownership or part ownership and not take the full responsibility. just by becoming a part owner, and you've got good succession planning opportunities by using a service trust. I saw, even at the Practice Owners Conference, people said, oh, that's the old model. And I said, actually, the old model works. There's no need to throw it out. The new model I'm looking like, we have companies, you've got a service company, then you've got multiple service companies for each location. It's complex, archaic, and it doesn't work, and it's terrible from a succession planning. And you only need one structure. You don't need multiple structures if you've got multiple locations. So there's a way to keep these things simple and make it tax effective. But unless your advisors are totally aware, holistically, top down, not just bottom up, of what to do, and they're not giving you piecemeal advice, you know, what you find is you get complicated arrangements that nobody understands, even possibly themselves. And we know that because them or their clients have got payroll tax problems. You shouldn't have any. None of our clients are registering for payroll tax because they don't have to. And that's where you want to be, okay? So these are the questions, and this is a counter narrative to what everybody's saying, but I think it's a really important one because you want to get it right and you want to sit and forget it. And that's what people want so they can get on with business. So this is a key slide that people should maybe think about. And this is called the quiz close account. And you can have your tenant doctor sitting in here, and you have to have a service agreement. I really recommend it's signed off and it's mandatory, and people do say that they understand what's in it. That's why we do an onboarding session with the providers as well as the owners. So everybody understands their working relationship, that, you know, the tenant doctor is giving all instructions to the service entity. It's not the other way around. And if they don't want to do X, Y, or Z, they might pay more money for that service or less money for that service if they don't need it. So it's fair, open, equitable, and transparent. And why that works is because no doctor likes to subsidize with their service fee another doctor who maybe is always running late, or, you know, who uses paper records instead of electronic records. So if you have a fair and equitable, open, transparent system that people understand, well, this is how we can actually maximize the benefits of our shared back office, then you'll find these service agreements can quite well be designed quite well to articulate those pain points. Doctor keeps turning up late, here's a late fee. At least the threat, you don't have to do it, is enough to change behaviour. And therefore you can have really constructive service agreements that solves everybody's problems when it comes to maybe behaviour that doesn't help run an efficient practice management and support business. And all that money that the doctor bills, let's say it's $100, goes into a quiz close fee, collection proprietary limited account. You know, people run off and do an ABN TFN. Well, you've just killed that structure. There's a way to do this properly, and we do really recommend people come and speak to us about it, because you need to get this stuff, agreement stuff, right before you start building onto that stuff. Because if the doctors don't pre-agree, then this stuff will fall over very, very quickly in the eyes of the law. Lucas can add to that, but effectively you can then do a fee split where you can do 70%, let's say, to Dr. Bill Smith, and 30% plus GST to the service entity. And we use the doctor's pay calculator to actually collect all the legal data that's needed for service agreements to be executed. So therefore it's a legally binding service fee that's tax compliant, that's being charged to the practitioner. And that's the way to do it properly. I haven't seen anybody service fee calculators that actually do that. They talk about it, oh, we're going to do it, but you need to see proof. And you need to see a lawyer's looked at it and signed off, not only the agreement, but actually looked at the software program and signed off on the software program. If they haven't done it, if they haven't submitted to the tax office, then you got to look, the best, it's a pretty spreadsheet in the cloud and not much else, because it's not going to have the audit trail that you actually need. And this program actually talks to, you know, the zero ledger here of, you know, the service entity, and there's supposed to be a proper zero ledger here as well, independent, so you can show that the money's been quarantined. And quiz close simply means if you've got a raindrop that drops into the ocean, that it maintains its character when it's in the ocean. It can be taken in and out because your legal agreements allow that. And the reason why people are getting caught is they're mixing up accounts, or whatever you want to call them, and still holding them under the name of the medical centre or the service entity. And the tax officer's doing an audit and they're going, listen, we've done a trace and the tax file number links back to this particular entity here. And guess what? You're still one business, not two. The rationale is, why would Woolworths bank all its customers' money with Westfield if that was Woolworths? The reality is, if you commingle the ownership of your bank accounts, they will see that as one business, and that's where you get these deemed contractor issues and all these other issues happen, and it doesn't quite work. People could argue, well, Dr. Bill Smith can have his own separate bank account and sole trader account. There's no reason why that's not. There's nothing wrong with that. But the problem is, it's the service entity is supposed to be sitting there and reconciling what money's been paid by the patient. But if they don't have immediate overview, and maybe because, but I've got access to their bank accounts. Okay, well, sometimes if they change their password and stuff like that, you don't. It's actually really time consuming to go through, a whole lot of patient billings, from the, let's say the Praxoft billing system, and then compare that to Dr. Bill Smith's bank account to come up with, okay, well, this is the correct service fee that we need to charge him. It's a lot of work where this thing literally takes minutes, if you've got 8 or 10 GPs versus the time it takes to do that kind of manually going through that. And that's what we're hearing people saying, it's taking us like 3 days to do the payment arrangements for their practitioners, and they're not still getting it right, and it's still not right from a tax or legal point of view. So the point is, you've got to invest, and a lot of practices have underinvested in this area. In getting your legal agreements right, your business model, your legal agreements right, your IT and accounting systems for this to actually work. The Doctor's Pay Calculator basically is a tax compliance audit tool, and it actually helps you keep track of it. It's all done by emails that are automated reminders to your practitioners, to your support staff, to make sure all that documentation is done. So therefore, it ticks all the boxes. I'm not going to go into mezzanine finance. I'm way over time here. It's one for, we've gone a little bit longer than we'd actually hoped. But what we're saying, it's doable and it's achievable. And just remember one thing: if you give more than just a percentage to a doctor and stop playing that stupid game, because that's just a race to the bottom, we'll do it for 30%, we'll do it for 25, that's not going to make you viable. And it's actually the wrong culture. Ultimately, what you want them to be is a future owner. They might be ready today, but they might be a small part owner in 4 or 5 years' time. What we've seen is, even if a practitioner owns even 2%, they become advocates to all the other younger doctors. And the way you successfully recruit and retain practitioners is getting the younger doctors to have a bit of a small ownership, and they will market it on Instagram, and they will bring their other friends, and that's how you make money, because then they get service fees. You don't have to spend all this money on recruitment agents and the like. And that's what happened, Gerald. They went from 3 to 17 doctors under 3 years and made the BRW fastest 100, because they actually aligned the incentives where people saw not a percentage, they saw a future, and one where they could have a say on how the business is run and not just work in it. And they knew they can earn money while they can sleep, not just eat what you kill. And that's what the key message should be. And what you'll find, recruitment retention, you'll find them a lot more stickier. And you can offer a whole lot of things to make it friendly. I'm not going to go through the details, but you can take a look in there. So where to from here, as far as I'm concerned, is I see this as the great GP emancipation. Corporates are not going to win. Insurance companies aren't going to win. Forget about all that. They're going to have some big tax problems and disputes they're going to deal with. I think they're pretty scared. My sources tell me they haven't got a solution because they haven't even heard this sort of stuff. But some of them, I believe, have got their head in the sand. That means there's low-hanging fruit where there'll be doctors leaving those areas where they're feeling that they don't have confidence in the management. It doesn't matter how big they are on the stock exchange, how much money they have. Each person will look after themselves. That's what happened in primary healthcare. They exited completely in 2021 when they lost their court case on lump sum payments, which that particular court case is why it's been embedded in these payroll tax rulings. What you're going to see is that, a lot of these businesses that are out there, most of the corporates, what we've seen only as last week, are all up for sale. They're all up for sale. It doesn't matter who you are. If you read the press, those business models are broken. They don't work. This model here, called Back to the Future, is where we're at. So get an alternate opinion before you start signing and submitting information, is what you would do now. If you want to see payroll tax evidence from Victorian Payroll Tax Audit, what they look at, Lucas and I did a presentation on it, a bit old, but it actually shows what the auditors look at. You can self-assess yourself for free and see what weak points you have, check the benchmarks or updates, contact us about Doctor's Pay Calculator. There's a lot of free resources there for you to take the next step. You can have a 30-minute video appointment with me, and we can have a bit of a chat, and we can explain to you, look, this is what you got to do, and this is how you can fix this, or speak to your lawyer, speak to your accountant, we'll work with anybody. All you want to see is focus on your patients and not worry about these problems moving forward. And if this gives you peace of mind and some sort of clarity, then that's what we're here to do for everyone. Whether you're a client or not, it doesn't matter. Thanks, Jeff. Sorry about that. Took a bit longer than we planned.
I'm not sure if we'll get to a Q&A session. I think Lucas has done an awesome job anyway, answering a lot of the questions in the chat.
Okay.
Awesome.
All right. Is there any themes there, Lucas, you want to talk to?
Look, I don't want to take up any more time because we have gone slightly over as per usual. But if anyone does have any questions, please feel free to reach out to David, I. I'm pretty sure I've answered as many questions as I could. I really like Simone's question. But unfortunately, just with that, it's got nothing to do with money being paid from Medicare to doctor, and then all of a sudden, in Simone's circumstance, the business would be protected. It's got to do with the fact that the state or the ATO would just assume that whatever money was paid from Medicare to the doctor is going to be technically salary or deemed employee from medical clinic to doctor. So the state is just going to, there's no better word for it, pretend that any money from Medicare to doctor would be the salary from the clinic.
Awesome, guys. Thank you very much all for your time. And yeah, we'll just leave it at there.
All right. Thanks, everybody. And good luck with it all. And yeah, like I said, reach out if you're in doubt. All the best.